All right, let's bring in Scott. We can get into what's going on with the markets here. And Scott, as I look at this number here, a little bit higher than expected. Yeah, quarter over quarter. Yeah. I was just kind of joking around saying I didn't think this was going to do much, but at 1.2% above expectations for 1% and above prior levels, which came in at 0.9. Maybe this is kind of the opening band to some of the other numbers, the employment and some of the other inflation figures we'll see associated with these numbers later this week.
Ben, I agree with you. I was talking with some of my colleagues like 20 minutes ago. We were saying, what eco data is coming out, and we were talking about this. We're like, okay, well, let's just wait for the Fed and wait for Friday's numbers. But yeah, this one is maybe a precursor to what we're going to see later in the week. Maybe that's what the market is looking into, expecting a hot number on Friday.
Yeah, I mean, 20 points in the S&Ps as we get this number from 51.43 down to 51.25. We're currently trading down about 0.4%, and nothing to shake a stick at there, right? And then you got the 10-year as I look from 4.6% to 4.64, so a little bit of a lift there as well. You can understand why stocks are coming off some here. Employment wages for the first quarter coming in at 1.1% in line with prior levels, but those prior levels got revised up here. The employment benefits for the first quarter did see an increase from 0.70% to 1.10%. Scott, let's talk a little bit about some of the volatility we saw in the U.S. dollar, the Japanese yen to begin the week with speculation. The volatility associated with the Sunday night and the BOJ that they were stepping up to slow the decline in the yen.
Boy, anybody that was watching that movement, watching the charts here, saw some pretty sharp moves here. It certainly looks like there was some intervention, and that 160 number seems to be the line in the sand.
Yeah,
that really seems to be the line in the sand. So we saw it touch 160. The yen rallied. What was it, about 6 points almost, which is just almost unheard of. And now it's weakening once again. And, is it going to hit 160 again? Maybe. All signs are pointing to the dollar at least remaining kind of where it is, if not strengthening a little. Obviously, depending on what Powell says tomorrow, what that number is on Friday, could dictate that. But the yen is on its heels here. It is really taken such a back seat. And it would not surprise me to see some intervention come out again.
A couple good points there. The dollar does appear as if it's in a bit of a holding pattern. Mentioned that at the top of the show. With stocks, even as we sell off here, 51.25. I mean, we're just below the March lows, off the lows that we saw earlier this month. But, and in terms of the BOJ intervening, I think you would agree, Scott, it was a matter of if or when, not if, right? I mean,
yes.
Yeah. So being short that product was a tough trade, even though it kept going lower, right? You knew at some point you were going to see that kind of reaction. And then I keep thinking about the Fed. I mean, what a difficult situation the BOJ's in. They have to step up, support the currency. And as you just pointed, you're probably going to have to at some point soon again, should we revisit that line in the sand that they established. I mean, what if the Fed was having to deal with the volatility like this? I mean, Powell be pulling out his hair.
Yeah, it is really a tough situation because I think deep down they know they have to raise rates. Yet, they're so against it. So they're really talk about back to the wall here. We talk about that with the Fed. The BOJ is double that.
Yeah, really speaks to I think the credibility and the efforts that the Fed has put forth to kind of establish their position relative to some of the other central bankers, especially what we're seeing play out in terms of the BOJ specifically. Let's talk a little bit about some of the data here, Scott. And we noticed here in terms of some of the numbers overnight, we were talking about the China data out of Asia, still coming in kind of mixed here. I've been saying for a while, I feel like lack of enthusiasm for markets there and opportunity there is provided for a little bit of underlying support for markets here and a bit of demand for U.S. Equities and some of the other opportunities that are available to traders here.
Absolutely. And, it's been a trade for the last 6, 9, 12 months here. Anytime you see a rally, coming out of China, it's been a fade. Every time there's optimism about the economy there, it seems like the following day, following a week, we get something on the opposite side of the story. So I continue to follow that trade. That is the trend. And until something breaks, that's what I'm going to do. And then, you go to the euro here, which you and I have talked. several times that I have believed that, that was going to be the first rate cut. And seeing the latest numbers come out of there with inflation down to 2.4%, they are out of their technical definition of a recession now. But they still really can't make gains versus the dollar here. And, they have, I think the ECB has their meeting on June 6th, and I expect a rate cut.
Scott, we talked about GDP coming in 0.3% after a contraction in the third and the fourth quarter, as well as those inflation numbers earlier. And definitely that is going to be a focal point into that ECB decision. And again, I feel like the euro is kind of in a bit of a holding pattern here as well. But lastly, talk to me about Fed Chair Jerome Powell tomorrow, expectations, and what we should be looking for.
Boy, I mean, he has done a complete 180 in the last several months. It was just 2 months ago, 3 months ago, he was pretty dovish, then turned very hawkish. And, I don't know what else he can say tomorrow, Ben, other than, we're data driven and it's higher for longer. We're just having a tough time getting that last stretch of inflation down. I don't know that he's going to clearly come out and say, we're on the table for a rate hike. I also don't think that he's going to come out and say no cuts this year. But he's got to be obviously extremely cautious with a hawkish tone.
All right, sounds like a fine line. He's got to walk. We'll see if he can pull another rabbit out of his hat, as he seems to be a pretty good magician thereof. Scott, appreciate you joining us here and sharing part of your Tuesday. Scott Bauer, CEO of Prosper Trading Academy. Thanks to you.